Hey guys, happy Monday. So last week, or 2, 3 weeks ago, we discussed a scenario wherein the market, either pulls down to 3,900 before it bounces, or the market, comes down to this next level of support around 3,800, which ideally, holds as the low before the market kind of has one more leg to the upside. And so far, the market did, right? We were talking about that when the market was still consolidating here. So far, we have, kind of seen the move done. The only thing that kind of surprised me was the fact that we rejected early, right, at 4080 instead of 4100. But, the rejection was kind of expected. So now, after, where the market has pulled back to, so kind of looking still the same scenario that I was watching, right? I'm watching to see where, we kind of find support. Right now, we are kind of at the 0.5 fib. So it's done the bare minimum, right? The bare minimum was kind of at 3,900. It's kind of where it had this bounce. And now we've kind of pulled back into, the previous level of support. And if that doesn't hold, I'm still, expecting this area between 3,774, right? And 3,827 to kind of hold. As you can see here, this has been a very powerful demand zone. So this is still the scenario that I am looking at, right? Alternatively, the market could, right? One thing that keeps me on my toes and one thing that could suggest the fact that, we kind of have a much deeper pullback, right? Whereas I'm looking for this 3,780 area to hold or whatever, right? 3,880, whichever, before it bounces, right? But the market could, kind of be like, hey, like these B waves, the characteristic of it is that they tend to be very deep, right? So when B waves are deep, what tends to happen is they tend to, kind of go towards the, 0.786 retracement. So that is kind of the more bearish version I am looking at. The reason for that is, right, if we go look at the chart of QQQ, you'll be able to see that, whereas ES has already reached the 0.5, QQQ is still stuck at the secondary retracement level. So in other words, right, what are the Qs doing? The Qs are kind of lagging, the broader structure of the market, right? The sell-off, you can see IWM has already pierced through its fourth retracement level. So whereas IWM, DIA, IWM, Qs, right? You can see that Dow, although, right, the difference between Dow and the rest of the market is you can see that there's a very clear ABC wave in the Dow right here. And what does that help us understand? That helps us understand that, considering the Dow has already almost completed 3 moves, the downside could be limited this week, right? Before we have a very aggressive bounce. So again, if you're feeling super bearish, right now, you've kind of only seen 2 versions, right? And both do have one more wave to the upside. I still do think that the market does have one more leg left this year before the bigger, bearish prowess is in order. So some might ask me, right? Like, show me a bear case scenario. So, I mean, it could, especially the Dow, right? You can see that the Dow moved up, right? You can see a very clear ABC move to the upside. So the Dow is maybe the one stock, right, that I could see wherein, where I mean, a lot of people are bearish right now. So I could see a scenario where if, right, if we don't bounce, you can see right now, there's a key level of support at 31,800, right? If we don't bounce here, or I'd say since the 1.618 is at 33,300, this is like, worst case scenario, right? If we don't bounce about 31,000, then I'd be willing to, be on the same page where, we have that one last leg to the downside. You can see that this was one trend line, that is one trend line. If we're not able to, bounce back up, then we likely, come down to 26,000. So that would probably be the only scenario that I'd be bearish on. Otherwise, I do think a little bit of pullback and bounce, like this scenario that I'm watching, is still completely applicable, for another bounce higher, and that's still the primary scenario that I'm watching. So I just kind of wanted to go over that, and we have discussed the wicks, right? And I just kind of, want to show you guys that. Okay, let's kind of wait. I think I did it on this version, right? Yeah, I've shown you this chart of wicks many times. We've discussed how this weekly support, right, this purple trend line acted as support, and we've always, had 28, 29 as a target. Like what seemed improbable, you can kind of see how in the matter of 4 weeks, we managed to, kind of hit our target. It's kind of really happy this chart played out. Just proves that, technical analysis will always be king relative to macro news out there. So yeah, this is the chart for Wix. As you can see here, it is now approaching resistance levels, right? Let's go to the RSI of Wix, right? I'm sure the weekly RSI is still healthy, but if I go to the 4-hour time frame, you'll be able to see that the Wix is kind of in overbought territory, approaching create resistance levels. So that could again kind of imply that, upside kind of could be limited, right? For the weeks, meaning markets are very likely going to bounce off of a key support level. And let's kind of look at the dollar, right? We discussed how the dollar, right? How this 105 was resistance and how it's due down, right? The dollar shows us that there could still be a little more weakness, right? In the dollar leading to an equity market bounce. So it's kind of something I am looking at for the dollar, bigger picture. So let's kind of see how that pulls through. The 10-year, we've discussed that ABC wave, right? And what happened in the market, you can very clearly see right now that, had a massive B wave rejection, and now we're heading down towards the C wave to complete this wave 4. So it's kind of what I'm looking at, yields as well. And so bigger picture, it's kind of what I wanted to discuss about the market. So now let's kind of look at the stocks, right? The first stock I want to discuss is actually LULU. And the reason for that is, remember how from Jan all the way to March, right? 3 months, we kind of consolidated in a range. You can see that LULU had a fake breakout, and then we broke the structure lower, right? Right onto support. So what I want to point out is the fact that LULU is, kind of at a very important level of resistance, right? If I go to the daily chart of LULU, you can see this is green trend line. It's the weekly trend line, right? You can kind of see that we went sideways, right? From May all the way to December, right? For 6-7 months, we went sideways before we broke down. Then again, we went sideways. So we are at a very key resistance zone, right? If we break below bigger picture, right? Right now, I'm saying 295 to 270, kind of the short-term put trade will be if we continue lower, right? But bigger picture, if you're looking at long-term short, right? Like LULU bulls, like definitely they need like I'm looking at a small picture short, but if we don't bounce off of this 280, 275 area, right, you can see like what big long-term trend line we've broken, and you can kind of also see on the volume shelf is just kind of empty. So this literally $100 of empty space. So yeah, LULU is showing very bearish signs, kind of at a do or die zone. I wouldn't be shocked if it actually bounces before it goes lower, but if it does go lower, it's in a lot of trouble. So that's one stock, I kind of wanted to bring up on this week's watch list. The next one I wanted to talk about is actually Etsy. The reason for that is you can see on the weekly chart right now, right? This is kind of the level of support, and we are kind of opening on that support level. So this could, right? If Wix finds resistance and the market, has a bounce, Etsy could be one of the stocks that kind of has that oversold bounce up to 120. So just keep your eye out for Etsy, right? The next one I wanted to talk about is also Amazon. Again, reason is very similar, right? It is, if I go to the shorter time frames, like 3-hour, we'll be able to see that Amazon right now is in the oversold territory. So I could see a short bounce up to 96, even 98, right? If the market, Wix rejects, etc., based on that thesis, Amazon could be a potential, candidate for a bounce higher. All right, with that being said, let's kind of look at the last one on this week's watch list. And what I have is actually Texas Instruments. And the reason for that is kind of the longer term chart, right? You can kind of see that it spent like try to break out, failed, try to break out, right? Failed. Again, try to break out, fail. So generally when something has that many failures, right? And they break below a key support level, in this case, below 169, very easily, right? There's nothing stopping it to coming down to 163, and a more bearish scenario would be 156. So yeah, and you can see that this is the 200-day on the weekly, and we're kind of rejecting it. Not a good sign, right? So if we do break below 169, could be a nice short. So yeah, that's all I wanted to discuss for this week. I hope you have a great week.